Hello friends, Eric Soto, TC Orlando Homes with Brian Peck of Nona Mortgage. We're going to talk about credit, the top 5 things to do to improve your credit. Let's hit it. Number 1, zombie credit?
So zombie credit is old collections that have been on your account for a good long time.
Yeah, pay them off.
No, that's what you don't want to do, because if the credit hit has already happened, it's already occurred, and it's already gone bye-bye. Right. And if you pay it off now, it's going to have a new credit date reported on there, which is going to bring it fresh to the mind.
Which could drop it even lower.
Even if you paid it off, your credit score is going to drop until it then recovers again.
So do not pay off old credit debt.
I'm talking anything greater than 3 years old, don't touch it.
All right. If it's newer than that, talk to your mortgage professional. They'll give you some sage advice on how to handle it.
Indeed.
Number 2, this one sounds pretty easy, but very important, paying on time.
Sure. So the best credit scores that I've ever seen in the 800s are usually older gentlemen or ladies that have just paid on time all their lives.
Forever. All right. So during the mortgage process or whatever, make sure that you continue to pay on time. And if you're looking to improve that credit, just on-time payments over time will cause it to come up. Number 3 is there's something you'd like to talk about, which are credit card buckets. What's that mean?
So if you've got a $10,000 credit card limit,
wow,
and you've spent $5,000 on that card, you're at a 50% bucket.
Okay.
If you paid that down to a 30% bucket by paying $2,000, you could improve your credit score significantly without having to pay all of it off.
Okay.
Conversely, if you have a $10,000 credit limit, you have $9,000, you pay it down, you only have a couple $1,000s, you pay it down below the 75% bucket, you'll improve your credit score as well. So the 75, 50, and 30% buckets are the sweet spots where you get your biggest bang for your buck. Certainly, if you have the wherewithal to pay off all your debt, you would want to, but you can target specifically to get underneath these buckets with a specific amount of money that you have to produce the more effective credit score bump.
Right, and that's really effective for if you're close to the next improved interest rate.
Absolutely.
Right? If you just need a few points and you pay down that debt, that's going to help you.
It might only take a few $100 sometimes. If you've got a $500 limit and you're right there close, pay $25 and you get into that next bucket and your credit score improves.
Best money I ever spent.
It's all about percentages.
I love it. And so there's 2 more ways that you can improve your credit. Let's talk a little bit about a secured credit card.
So secured credit cards allow you to build credit through on-time payments that are, we won't say artificial, but they are definitely allowing you to show good credit usage. You got a loan and you're paying it back on time. Yeah. That's what lenders like to see.
So usually it's a credit union, or some banks also offer it. You give them $400, they give you a credit card with a $400 balance, right? That's why it's secured, because they already have the money.
That's correct.
And then you just use that to maybe go get your gas for the month, right? You use it for one specific purpose, and you also maintain that 30% threshold. You don't want to exceed the 30% threshold on that card.
And you never go further into debt because you've already put the money out there. It allows you to budget yourself and still get the credit that you want to have from it.
Great. So the last one, it's along the same lines, but slightly different, and it's a secured installment loan.
So very, very similar. Secured installment loans. Our car loans are secured installment loans where you've got an asset tied to it and you're making payments on that. Whatever you're getting, student loans can be looked at in that same way. So if you're paying on time on student loans, any kind of loan that's being processed and reported to a credit bureau, you want on-time payments on it.
Right.
And it improves your credit score.
And so an installment loan also, it's a fixed payment that you make. It's exactly the same every single month. I know of a few credit unions here locally that have a specific product where it's the same thing. You give them $500, $1,000, they hold it into a CD for you, and then they loan you back that money, and you have a fixed payment every single month.
Yes.
Which is another way that you can improve your credit score, by showing on-time payments. And then that way you have a mixture of credit as well, installment versus revolving, which also improves your credit score, and it kind of gives you a double whammy bang for your buck.
Indeed, and you want to start that process early. So talking with your mortgage broker to be able to get a look at your credit, 30, 60, 90 days before your purchase date is going to allow you to be able to do these improvements early enough that you can see the credit score improvements, and then we can pull another credit after the go. Because if you're doing the installment loan openings and opening this and opening that to set up the credit score improvements, you're going to see a drop initially, but then you're going to see the boost later. You want to get started on that early.
Absolutely. Awesome. Well, thank you so much, Brian, for sharing that little bit of knowledge, that experience that you have had in many years that you've been in the mortgage industry. We really appreciate it.
Thank you very much.
And you guys, please like, subscribe, share with your friends. We want everybody to improve their lives with this information. If you have any questions, let us know in the comments below. We'll talk to you later.